Okay. Hopefully this is better. Is that better? Is the audio broken still? If it's still broken, I may have to reboot my computer. Um, Let me know if that is better. Is it still just static? Okay, good. I'm getting positive. Awesome. All right. So back to what we were talking about. Because so yesterday into the close, we were looking to move the market up and start taking out weak bearish positions. All of the positions from yesterday, for the most part, were weak. There were some here, here, and off the open. So there's a whole slew of weaker hands in these positions from last Friday. And what happened into the close was my policy is I just like to close into the weekend. I'm not a big fan of weekends. Weekends are this huge variable that's really hard to control or predict. So I'm not a big fan of it. And if you were listening, I really like to be happy over the weekend for my family. So holding over the weekend can make me pretty grumpy, and I need really good reasons to do it. Well, last night the market opened lower and it pushed down. This is not entirely uncommon in this scenario. Let me show you what scenario I mean by opening up the, I'll show you. Oh, look, my image flipped. So here we are, opening up the live charts. Over here. Okay. And this is what I'm talking about. We had a really deep move on the stat ADI, and this is one of the settings in the ADI indicator. And you see it moved up, and prices gave us a positive divergence. And this is not entirely unheard of. We've seen this before in previous times when we had these really strong signals. So we're getting a positive divergence here. And I think what happened, and this is just my opinion, of course, since it was overnight and we really don't have a lot of data on it, but my opinion is that this is when the whole thing started, right here. This is the most important spot. We got our signal here, but I think it was pretty actionable here, and the market went ahead and shot for any larger handed stops. And we've seen this before, and it is a reasonable thing to assume that when really smart analysis figures out what the market's going to do, that one of the best plays you can do is just simply wait for really smart analysis to figure out what you're going to do and then run them out, because that gives you a much larger open interest position in doing so. So I think that's what that dip was. It moved back up, and off the open, we had some really interesting events that I want to talk about. So that's where we were as the market opened. We had this bullish perspective. We wanted to take out weaker bearish positions to get things going. And then the weekend came into play, and the market moved down, and I think took a really aggressive stab at stops before opening up. And I think where it opened is interesting right here. You see, this is where that you would look at this and you'd say, oh, so stops were sitting right here. So if you were trading the SPY, just a second. I'm getting a really sad face by a 5-year-old through a window. Just a second. I think something's wrong. Okay, I apologize. This swing set was too hot. If you were trading the SPY and it opened here, then you would have been about where your stops would have been if you were waiting for the move up. And I think that's really poignant, and I think it's important and characteristic of a market looking to take open interest off people's hands. So you could see that the rest of the day basically just moved in this one direction, and we're going to look at how that played out. So the first thing that happened was right off the open, there was bullish liquidity, and this gets things going. That TV's a little loud. Just a second. Sorry, I hope you guys have kids and understand. Okay, so this moves down and we get our bullish liquidity. See, decay moves under zero, trapped orders. So the bulls show up. Do they hit? Yes. Yes. You see that? They were moving tension up right here. And then it started to move down. And this is really where it gets interesting. And you have got to pay attention to these numbers as things develop. The first thing that happens here, tension rises right as they're getting their liquidity. And then it moves down and samples zero. So we get a zero test. What is a zero test with a 30-minute tension? Give you a second to think about it. A zero test is when the possibility space of the market is testing the controlling party, whoever has control of it. And in this instance, the bulls had control of 30-minute, though they had lost daily tension. But we'll get to that in a second. This is really interesting. So it comes back and the bulls get a zero test. The question they're being asked is, do you want to continue to control this? And if they do, then you'll see their money come into the market. And what does that look like? Well, it looks like price is rising usually. And you could even see right here alongside that zero test, decay moved back under, trapped orders in. You see that? I mean, can you see that? Decay moved under zero. It gave us a signal for the moths to come flying to. Did the moths come in? Yes, we could see the green, which you buy against sellers. So sellers came in. So there's our liquidity. And then price popped up out of that. But you could see that this time the bulls did not impact tension. So we go from them impacting it to not impacting it. And this is really where I think the conflict is coming from out of this market. That the bulls are back and forth about their intent to hit the market. Now let's look at what the bears have been doing. You see this moved up and we got some bearish liquidity right here. These are bears. And did they impact the market? Absolutely. Look at that. Tension moving down. So the bears show up. We have bears. We have bulls. Then we have the bulls struggle to they hit. You see price, they hit, but they didn't impact, so they failed to impact tension. But the price was also responding to this zero test. So this is getting hot. And the reason is because the bears see it and they want it. They want to pump the market down. They want tension to continue. They want a whole nother leg down. That's what they're seeing, is a whole nother leg of this moving down. That's what they're looking at this moment. And they go in, they take a swing, they hit it as hard as they can, and it ends up running right into a zero test, right into bullish liquidity. Yes? I'll be back. Okay. All right. So the bulls have put themselves in a really interesting situation. And I want to point something out. The best investments, I know this handwriting is terrible. The best investments are the ones where you first put in money, and second, you do nothing, and third, you take profit. This is the kind of thing you're looking for in all of your investments everywhere. You never want investments that require you to do all or much of the work on step 2. So it's really important that you keep that in mind. This is the structure of all good investments. They are where you can put your money, do nothing, and then take profits. So looking at this, if we have the bulls coming in, the bears coming in, then the bulls failing as they get a zero test, and seeing price move favorably. One of the things to keep in mind is that good investments mean that the bulls will be able to do nothing as the trade works. But, so that I think that's what the bulls are looking at. That's what I'm trying to describe. What are the bulls looking at? They're looking at sitting back, putting their hands in the air and saying, let's just let this go. Let's let this ride. We'll get tension back up. What the bears are looking at is getting this to move down. They're still looking at pumping. Now, why would you might be saying, why would the bears be looking at pumping the market? This is way down at the low of a range. You see the major ranges, tension. They need to pump. They need to pump tension down. They're nowhere in the clear here. And I think the bulls have some structural advantages. Oh, somebody has gotten onto the Zoom and is being weird. What was that? Did anybody else see that? I ended. Okay, now we have a guy pointing a gun at his head and acting like he shot himself and flashing paraphernalia. What the crap? Okay. All right, well, let me quickly ban all these people who have just entered. So my Zoom is being just massively attacked. I think I can ban them. Oh, I can report them. Okay, let's report them. Inappropriate screen, abusive conduct. Sharing or posting Nazi para stuff. I don't know. I'll just copy that and send. Let's see. Let me make sure. Oh, did they leave? Oh, I got one of them. They left. As soon as I reported somebody, they left. Weird. Okay, so a bunch of people came into my Zoom, started posting like a ton of Nazi stuff, and then left. Just a minute. Okay, yeah, that was. I'm not going to shut it down. I'm going to report all the people for what they did. So, and Zoom does a pretty good job of pulling people out as soon as they get reported. I can actually go. I think I can go in and look at the history, and I'll report the. I think it was like 3 people that came in. That was nuts. It's not actually the first time it's happened. I have it set so that you can't automatically take over the screen. They won't allow me to disable video for some reason. So people can just pop in and do that. They might now. I haven't checked in a while. I'll check later today, see if I can ban that. Anyway, that was nuts. Oh, okay. Sorry, I had to run and do something really quick when I shut this. Okay, so I'm trying to build the possibility space here for both sides. So the downside, we have what the bears look at. The upside, the bulls are looking at a good investment. The problem is the bulls are starting to show cracks in their structure. I mean, the bulls came in and they failed to impact. Even though they got a zero test, they still showed a couple of cracks in their structure. This is a problem. The second thing to keep your eye on is that the bears here are going to want to liquidate. And so you put I think the best spot for them would be above yesterday's high. This is where we were sitting at yesterday with a lot of ideas in our head. So I think putting a stop loss up there is the first place where you'd put your stop if you were a bear. You'd say, well, I'm probably right unless we get up here, right? So moving forward through this, we then get a second bearish sample, and you can see the bears fail to hit. So they hit here, they fail to hit here. The bulls hit here, then they fail to hit here. So both parties, I think, are thinking the same idea of a good investment, which is to sit back and do nothing. They're trying to do that. And the bulls win. Right here, it's pretty clear in my head that the bulls won. The bears tried to sit back. It failed to work. Now, they did get tension under zero, but not by much, just down to about, I don't know, 12% on the force here. So at that point, I think that that these guys right here are looking to get liquidated. The price wants to move up and liquidate them through where their stops would probably be at, where that you would accept you were wrong if you're an institution. And then from that point forward, it was just a lean. And a lean is where the market leans into a sample. And again, the bears had already failed. They were underwater from way back here. So getting this sample here, you don't anticipate they're going to work. And then we get a bullish sample right here, which works out great. And the bulls go ahead and push those bears out. And at the same time, look at what happened. So this is really important. So now that the 30-minute tension's down, we're dealing with it coming up and giving a zero test to the bears. Now the bears are getting tested. The market's asking, bears, do you want to maintain your control over 30-minute tension? And you can see it pushes right up through their position. And at the same time, you can see that they got a sample in this. And if you move up, which I'm going to move this so that you can see it better. Right there, as they're moving up, they got this volume as velocity was moving over zero. So I don't look at that. I like it after. So I think their volume is right there for this right there. That lines up with this. I think the signal happened, and then here's the trapped volume, and that there's institutional bears right here, and they want to defend 30-minute tension. They want 30-minute tension back under zero. And you could see that this today, even though it's moving in one direction in terms of price, in terms of control and events, this is flip-flopped. We get a bullish 30-minute sample on the 30-minute, then we get a bearish zero test on the 30-minute tension. But, and it's a big one, bears could not maintain control of daily tension. You see right in the middle of the day, right here, that was the moment when the bears lost control of daily tension. And this is, I think, a big deal, because looking at the first time they got daily tension down, look at how the market reacted. This time they get 30-minute tension down, and look at how the market reacted. It just, night and day difference. So when the bears are in control today, horrible for the bears. When the bears were in control last Thursday, excellent. So totally different response. So just like Friday, we have the market up, both the 30 and the daily going into the close, and we have the perspective of liquidating this position, which is right there off this volume right there. So that's the position we want to liquidate. Now the question you need to ask yourself, well, where would you put your stops if you were a bear? And that's an important question. And I think it's a multi-day thing. I always look at the last most significant event, and I think we already got this one taken care of. I think the next event is going to be taking out this position here, because that is where the bears, sorry, I did an X because that's where the bears failed. That's where the bears failed last. And so I think getting up above that high is going to, these were shadow bears, if you remember. and they actually did pretty well, but they helped pump the market down for the investors. So I think knocking out this shadow bear position would be a good spot to say, well, if we get above that day's high, that's great. If we get above the previous day's high above that, we're going to be looking at closing up this gap here. So I think this would be a good spot. This could be a spot, somewhere in here, I think would be where that you're going to put your stops if you're an institution, or at least where you're going to look at unwinding your position because you're really concerned. The reason that we point that out is because the bulls I see have control of this. The bulls picked up some positions here. They did nothing right there, and the bears hung themselves. You see, and as price got up, they got liquidated. The bulls again picked up a position here, so they have 2 positions. The bears are in right there, and this is how it's built. And in the total sum at the end of the day, the bears lost control of the market. They had another day where that they could have had a trend cap, which is where you get both down at the same time, and then you call that a trend cap. In this instance, it's a little hard to call it a trend cap because the bulls didn't really have a trend going, so how could it cap that? The best spot for a real trend cap was right here last time because the bulls had been just majorly in control of the market. Then we get a trend cap here. So that's just the previous example of one. And then you could call this one a trend cap as well because the bears were controlling a pretty strong trend. They get everything over 0. That's going to be a bullish trend cap. But typically I don't track trend caps unless it's been more than 1 day. Like it's got to be a couple of days trend that's been just rolling along. So, okay, so I just got Matt just asked, why did price dive so much if bulls are in control? Well, what's important is that you ask yourself what it is that bulls are controlling. And I think that there's a really big misconception that controlling a market has to do with controlling price. Let me give you an example that's a little aggressive, but I think it'll make the point, okay? Let's say you're a horrible psychopath, but a villain in a movie, and this villain's motivation is to control some woman he's obsessed with. How would you, as a horrible villain, imagine this villain controls that person? And I think this is a really important example because I think it's very similar to how markets think and function, which is if you want to control a person as a horrible monster of a villain, you don't physically go gain control of that person. If you do, you don't really have control of that person because they're no longer that person. So if I handcuff you, you're no longer the person that creates value, that does things that I think are interesting or bad. You are now just a restrained human being. And so I think this is sort of a terrible analogy, but if you think about it, the best way to control them is through all sorts of other things. You want to control what happens in their life. You want to control maybe whether they can access their money or not, or if you can do all sorts of different other things. So I think markets sort of think that way. It's, well, what do you want to control? And if you control price, you're not taking on any risk. So if I take a bunch of money and just shove the market up, I mean, go buy into a penny stock. If you buy into a really low market cap penny stock and you dump in just $10,000, the price will shoot up and you will effectively control price. But when you try to cover, you can't. So you don't really have control. And I think what it is that the bulls are controlling is possibility space. So what I think is important about this is if you were, let's say, a god of the planet and you wanted to have godly power, I think what's interesting is when people imagine this in their heads, they say that if a god showed up, the god would say, they would say something like a decree, like, you will now die, and then they die. Or the oceans will flood the earth, and then the oceans flood. What's important is to keep in mind how this interaction is working. First, the person speaks, then the event happens. This is getting a little laggy here. There we go. So what they're doing is they're saying, here's what's going to happen. even though it seems like it wasn't, there wasn't. So they're talking about the possibilities in the future. And what they're doing is taking all the possibilities that could happen and they're picking one. They're saying, well, I want this one to happen. And could all of land disappear underwater in the next hour on planet Earth? If we took all, could the water rise and just drown everyone? And you would say no, but what you actually mean is that the probability is so low, there are so many zeros after the point before it says like 1% chance. That's what you mean. The probabilities are so low, it's outside of your threshold of even caring. So if there was a God who came in and said, everybody will now drown, what they're doing is they're picking that possibility space, which you thought was so far outside of the realm of reality it wasn't possible, and they're moving it up into the 100% spot. And this is great power, to be able to suggest which possibility of all of them is going to be raised to the most likely. So I would argue that even someone that you might think has godly power to control the future, they're still dealing with probabilities. So even if they said the world will now drown, there's still a 0.00001% chance that that doesn't happen. But that is now pushed so far out of the possibility space that it's beyond their threshold to even care. So it's essentially certain. And so when I think of bulls being in control of possibility space, what I mean, thanks, Jim. What I mean is that they're looking at a future possibility that they want, and they have the capacity to rise that one possibility, to rise its probabilities up, that it has a high likelihood of happening. And so how did price move down? Well, bears could sell, people could sell things. You can still push it down. I think that's important, is that it's not that the bulls so much have the control of price. It's that they have control of which outcome is likely. So moving down, in my opinion, is great. This is a great opportunity. This is a buying moment. So if you're tracking this narrative and you're saying to yourself, oh, bulls have control, and this reminds us of yesterday, which if you are a real big fan of my channel, you're looking at this as symbology. There's the G, symbology, because this looks like yesterday, and it's a symbol that forces your memory to draw up an outcome. And so it's essentially propaganda, in that propaganda can get you to look at two people. So here's a person looking at it, and here's a person looking at it at the same data, and have wildly different outcomes. Propaganda is where we don't manipulate the data, we manipulate your perception of the data. So if this person had received propaganda, they would see outcome B, and this person had not received propaganda, they would receive outcome A, and typically A absolutely, big ol' huge not, does not equal B. So you have successfully administered propaganda if you have two intelligent human beings looking at the same data set and coming to almost opposing results. That is propaganda. It is, well, it's the fruit of propaganda. It is the result of it. So anyway, so you could see right here as we dipped on that strong move down, as you say, you could look at it, which I do, as a lean. Look at that. It leaned down and sampled the bulls. Now, why would the market want to sample the bulls? Because the bears got this zero test, right? They got liquidity right here into the highs. So we have bears coming in saying, no, we want to defend this. But didn't they already lose control of it? I mean, the bulls this morning, it was just a shocking open. It was hitting stops. It was very terrifying. Then we got data point after data point that led us to believe the bulls were regaining control of the market. And then they did. First here and then here. And now the bears are going, no, give us data points. It's like, you guys already absolutely lost control of this market. You gave it up. You failed to impact the market. You failed to keep tension down, which was a huge gift. So we've got a bunch of data points that show that you're terrible. You're all just the worst. And bears are the worst. It's just true. So now that we have this bullish sample here, we could take a look. Are bulls impacting tension? Are bulls hitting price? Do they have trapped orders, which is the moths that come into the light, which is this? Here's the light, here's the moths. Yes. Bulls are hitting. There are bulls here. This is a big check mark. So we're seeing the bulls come in. What do the bulls want at this point? What's their objective? The first objective is probably to take out this position here. That's what they're looking at in the near future. The second objective is to pump tension higher. We want to get tension away, again, keep control of daily tension. And so that's what they're looking at. Their ultimate goal is to pump tension further away. And the question again, how do you pump tension? You liquidate the counterparty, you liquidate your adversary. And we already have an adversary here, right here. A legitimate, intelligent adversary who came in to defend the possibility space for their team, who lost control of it, but they hit, they even impacted tension a little bit here. So we have an adversary in the market. We have everything we need for the bulls to cast their vision higher. But they're not looking, what is price right now? They are not looking at this. No institution is looking at 30.45, 30.46, 30.46.50, 30.46. They're not looking at that. They're going, okay, we want to take out this position here. Their stops are going to be in this range here, or at least they'll unwind. How can we get these stops up higher? We want to do something called optimize profits. How do you optimize your profits? Well, you emotionally convince your opponent after they've lost control that they're okay, that everything is safe. Don't you worry, guys. Don't you worry. Your position is good. Now, human beings do this all the time. I'll bet you've done this. All of you. You've done this. When you're playing a game with somebody else and they did a really good job and you thought to yourself, man, that really bugs me. But you walk up to him and you're like, you know what? Good job. That was amazing. That was such a good point. And you know deep down what you're trying to do is sabotage them. You know your compliment is specifically designed to develop overconfidence in your opponent so that they get overconfident and then they miss the next goal or point or whatever. You do it all the time because you're just a terrible person like the rest of us. So they're thinking the same thing. If we can optimize. So what do you want to do? Well, we already kind of did it. In fact, Matt was just asking about it. How come they got such a strong move? Matt said to himself, that was strong. Wasn't that what you're thinking, Matt? You're like, gosh, those bears have a great strong move. They're so meaty. So that is how the bears were feeling. In fact, and this is interesting because Matt picked up on that strength. So this is the optimization of profits. It was not a move down because of the strength of the bears. I think that was a move down to get these bears to feel okay. Right? They want to go from they're taking on risk, then they get a nice move in their favor, then they can move to apathy. We want them to be numb. Okay, the whole goal of this is to be numb to the sting of risk loss. We want them to not feel that sting. And the only way to do that is for them to feel like everything's okay. This is a state of safety or security. In a world where everything is risk, feeling safe and secure is a stupid thing to allow yourself to do. They were made to feel safe and secure. They are going to get blown out of their position because safety and security are the antithesis of risk. You're trying to believe that two things which are mutually exclusive are not, which is carrying risk and feeling safe and secure. These two things cannot exist at the same time in a person, but human beings are amazingly creative. We can make both of those things true by using evidence. We love evidence. As humans, we just love our evidences. I have evidence because it felt good, is really what it is. A price move in your favor just feels good. It doesn't prove anything. And I think that the bears had some evidence, and that evidence made them feel safe. And that safety led them to feel nothing, really. They don't feel now. And so what's useful about that? Is that useful? I mean, if you could make your opponent who has lost control of the market feel nothing. Well, that means you can take price and just keep on trucking. And they're never going to go, ouch, right? Isn't that what you're supposed to say when stuff hurts? That's what you're supposed to say. These bears aren't going to say, ouch. These bears are going to say, I told you so. I knew I was right the whole time. These bears are going to say things like, this is headed down to $0. And because it's going so, this is a qualifier. It's saying it's high, or it's a lot. Because it's so high, it's a high amount, a lot of profits. Then here's the carnal mistake of traders. Are you ready for this? It's the carnal mistake that high reward equals higher comparative, higher risk. That's what we want, right? We were trying to optimize profits. So you get them into an apathetic state, then they can push that higher risk. And you're saying, why would somebody get a little bit of this? Why would you move your stop up? I thought you'd want to move it down to break even. No, that's not how humans work. People say, oh, I'm right, therefore this is going all the way to 0, and this is an overconfident state. And they scoot their stop up because it's worth more. I can risk an extra 10 or 15 points because I know it's going to go almost your typical reward squared. And if you're looking at this type of reward where you're like, I typically get 20 points, and you're going, it's going to go 2,000. If you have this type of relationship here, you need to be concerned. And I think that's what's happening, is that they're thinking that this is going to push a second leg down. It's going to go really, 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 really far. And so they're able to move their stops higher. So I think that's what's motivating the condition that the bears are stuck in right now. They're stuck in an emotional state that's highly predictable. And so that's why I think that these guys are in trouble. And that their perceived potential here is just inaccurate. I think the bulls have gained control of possibility space. We can see that. We can see that the bulls have successfully come in and hit here, they hit here, and even right here, you could say to yourself, well, they failed in the moment, but then over time, they ended up doing a good job. So it just took a little time. So at this point, the bulls have hit 4 times. They have 4 positions that you can track. The bears have failed here, 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 right through this section, and here. And right now they have one position that's sort of holding together, but is at real risk of getting blown out through this here. And look, we've stacked up this position, that position, and that position. Nice in a row. And if we just get this right up here, I think we stop out one, then the other, then the other, then the market can start looking at closing up the gap. And I think that's what's setting up in front of us right now. But we're going into the close, and the market's going to close. So if you have position and you'd been tracking this through the day, some point you're able to pick this up and go up here. Once the market closes, you need to realize that you're taking on a second trade. Pierce, you stink. That was stinky. This kid. Okay, so if you got in here, anywhere else, that was your first trade. And then you saw the market move, it rallied, now it's dipping. I could even argue this would be your third trade, but if you're looking for a swing trade, you need to realize that holding through the close is a brand new trade. You're committing to after hours markets. I don't think it's safe for people to think, even swing traders who are going to hold for months, I don't think it's a safe philosophy to think that it was all one trade at all. I think it's a dangerous philosophy to think, well, I got into this trade and I'm going to hold on to it. That is a brand new philosophy. It's a brand new trade. This holding through the close today is entering another trade. And so what that means is you need to justify. We were able to justify the move up and closing near the highs. We were able to justify that through the day. We were able to justify that this was a buying opportunity. We justified that. We were able to justify, but going into the close, you now need to say, well, overnight, do we have enough precedence, enough pretext to get this to open higher or at least move up overnight? And that's something that you need to grapple with, the fact that you'll be entering a brand new trade. This is not, I think it's silly when people say hold, that's the same trade. It's not. You might as well just close your position and reopen another one, because if you don't, you're not going to realize what you're doing. You'll think that it was all the same, and I don't think it was. So this is a new trade. Is it going to move up overnight? Do I think it'll liquidate this position? Yes. I think the weekend trade was tough. I think if you tried to hold on to that, that was hard. If you did, you're insane. That was a lot of risk. If you had an option on the table, okay, I understand that. But if you held on to an outright contract, I think you were nuts. I think that when the market opened lower, you should have covered that position. At least that's what I would have done. I would have reconsidered if the trade was still viable and attempted to re-enter. I don't know that the overnight session was easy enough to say I should have held that. You shouldn't have. If you had an option, yeah, I think that could have worked a little bit better in your favor. So at this point, this is not the same. Remember, this is symbology. And that's, I can spell it. So this is not the same condition as we had into Friday's close. Friday had a couple of days of weekend in the middle. This one doesn't. This also has everything lined up. So I think we're going to see this play out. I think the bulls are going to keep hitting. I think we saw the bulls show up more aggressively than usual to get 30-minute tension through zero. We got daily tension through zero today. I think there's just a lot of good stuff going on for the bulls, and it's Monday. We got some good plays to come up into tomorrow, and I think the bulls would be totally makes sense for them to run this up overnight, pressure those positions. I would love to see this gap up and then pump this up higher. And how would they pump this up higher? Remember, they liquidate these guys, and these guys. We can liquidate those guys. This is going to pump, and the bulls will regain control of everything, and it will look beautiful. Now, let's take a look at the bears position. So the bulls get some nice sampling here, and the bears get this to move up, so we have a little bit of bearish liquidity there, a little bit here. These bears are just doing terrible. So this is a no-go. This was okay. It was a hit. They hit. So what do they want to see? Well, what the bulls want to see is they would love to see this move down, open about in the middle of the range here, liquidate this position maybe overnight, could help do that, this one, and get that to open, in this area here, and then try and get this back under. So it's not that the bears don't have anything going. They're very close. I mean, if we get this to gap down, the bears could take this back over. It's absolutely possible. The reason that the bears don't have as good advantage is because they don't have these on their side. Also, they did poorly all day today. They did poorly. So they have a bad record for today. They have lost control of possibility space. So are they going to gain control of the market overnight? Are they going to shove this down? Well, yeah, they could. But is that reasonable? Would you want to do that? If you were a bear with this, would you want to shove this down overnight? I wouldn't. I wouldn't put my money into that. And I wouldn't do that because pushing this down overnight, say this came down, let's say this came down. What if this opens at zero? That'll be a zero test. I mean, even now, it would be a zero test. And the bulls will come in and want to defend that. And I think immediately at the open tomorrow, this would shoot back up. I think the bears putting money into the market right now would be just asking to get their position folded over. Just asking for it. And I think we have a sufficient amount of bears trapped into the market that it does make sense to move up overnight. I do think so. I'm not sure that we have a sufficient enough bears still trapped into the market to guarantee or really strongly say that we'll have a gap up tomorrow, but I would love to see a gap up. I do think a move up overnight makes a lot of sense. I do think a move down overnight would motivate a lot of bulls to just buy into the market, because that would just be blatant foolishness by the bears. So that's where we at into the close. Tomorrow morning, what you want to watch for. You ready? So let's look at tomorrow morning. This is going to likely move up. Maybe it won't, but I anticipate that it will. That's what I'm thinking because of the way that today worked. So tomorrow morning, watch for some bears to show up. So first you want to see some bears. I'd like to see bears first thing would be great. And then I want to see them fail. And then I want to see bulls. That's a cue. Liquidate. I can spell. Liquidate bears. I want to see that happen like that. I'd love to see this. You know, it opens. We get maybe decay rises. We get some bears show up, you know, right here. It moves down a little bit. Bulls get sampled. And the bulls liquidate those bears, and it just cascades. And we close the gap tomorrow. I think that would be just perfect, and it would be everything I want out of this whole entire bullish market that happened today. This was very bullish what happened today. So I hope that helps. I'll see you guys tomorrow.